Welcome back to Fast Market here on the Schwab Network. It's time for a cash tag segment. For that, let's bring in Landon Swan, co-founder at Likefolio, to break down Home Depot. Landon, when you look at this stock, I look at the chart over, since we hit those lows at the end of last October, it's parabolic to the upside. And I start getting concerned here a little bit because the last couple of quarters, they've seen declines in sales growth, but the stock continues to chug higher. Do you have the data to back up this move?
Short answer, no. Now let me get into the long answer. So yeah, you're right. Everything that they've reported has been kind of weak, right? Same store sales were down 3.5%. Transactions were down 2.1%. Their average ticket was down 1.3%. Even their big transactions, those were down almost 7%. Really weak in flooring, countertops, and cabinets. So, they reported a fairly weak quarter, but the bar was pretty low. I mean, the fact that the stock has gone up so much since that report kind of tells you that expectations were low. But now we're getting into that territory where I think a lot of people expect a big turnaround. And frankly, the Likefolio data just does not support that. We know that consumer spending is down due to inflation, high interest rates, and less housing turnover. I mean, that's a huge one for Home Depot. And also everything that we've got is showing that people are valuing experiences over goods. And so, it's just not a home renovation time right now. I think we need interest rates to come down, the housing market to pick up, and houses to turn over. And then, you buy a new house, you want to update things, and that's going to be good for Home Depot. But so far, it's not happening. So, when we look at them against Lowe's, one of the things that we like to look at, happiness is pretty much dead even. I mean, I think it's 66 to 67. So that one's not that important. But when we look at the number of people going to the website, Lowe's is at a plus 7% on a year-over-year basis, where Home Depot is at a -3%. And so I think that kind of tells you a little bit about what's going on here. And you remember, these are not the exact same company. Lowe's is more catered towards the smaller projects, the do-it-yourselfers, more consumer-facing. Whereas Home Depot, it has all the same kind of stuff, but it definitely leans more towards the professionals and the bigger projects. And I think this chart tells you where the market's going right now. The big projects, the professionals, they're just not seeing as much volume right now as just the average Joe that wants to try something and go do the small project himself. So that's where Lowe's is doing much better. So the data that we've got does not support Home Depot at these levels. Even when you look at just consumer mentions, their mentions are down about 11 points on a year-over-year basis, 11 percentage points on a year-over-year basis. So the stock obviously is doing much better than that. And you're starting to get into what we might call a divergence here, with that blue line of consumers talking about Home Depot, going to Home Depot. It's been pulling back, and it's seasonal. You can see that there is some seasonality here. So it's not just the trend, but it's not strong on a year-over-year basis. And so that takes seasonality out of it. We're down 11 points. The stock is, it's not at all-time highs, but it's right there. So this is, for us, this is getting a little bit too high, too far, and I think that pullback is warranted at Home Depot.
Yeah, Landon, high valuation and a weak remodel market is not a good It's not a good setup for this company go forward. Same store sales last year down 3.5%. U.S. down 4%. Full year projection, same store sales down 1%. Earnings per share up 1%. This is your mentions count shows the divergence. A lot of time it shows that the stock is lower than the enthusiasm. This is the opposite. You've got the stock relatively high and the enthusiasm working its way lower, Landon.
Yeah, and we get most excited when enthusiasm's really high and the stock's down, right? That's when you can make some big money. But you also have to pay attention when it's the reverse. This is more of a bearish or short selling type opportunity. But when the stock gets too high, too far, too fast, and there's just not a lot of data to back it up, and we're going wide on data. We're looking at consumer trends. We're looking at number of people talking on social media, people going to the website. All of it is not in favor of Home Depot. So, I'm not saying that this stock is going to crash or anything like that. It's just it's a little rich right now. So, as an investor, if I had a client who's an investor in this and they were asking me, I'd say, tap the brakes a little bit here, maybe take some profits. This has been a nice run. And, you can get back in, I think, at 10% lower than you are right now, sometime over the next couple of months. I think they report in May. So you've got some time even before that report.
May 14th.
Yeah, so you got time before the report even, I think, that we may see a pullback. I just don't have any data that says, yeah, they should be trading where they're trading right now. Really, I think they're at least 5%, maybe 10% too high.
Yeah, I was looking at that, the year-over-year change in visits, 30-day moving average, where Lowe's is actually outperforming them, even though Home Depot has more of the pro services side of the business, which is a big moneymaker for them. But Landon, I guess my question for you is, the consumer is still doing fine right now, right? The job market's still robust at this point. People are still spending. Wages are going up. But is this one of those dilemmas where, people fixed up their houses? They bought stuff for their houses during the early stages of the pandemic through 2022, 2023. But they're still spending on travel and experiences at this point. Is this going to be, maybe that headwind for Home Depot is that people, I don't want to spend money on my house right now. I'd rather go take a vacation.
Right. And you know what? People aren't thinking about selling right now because anytime they look at, okay, maybe your home value is up, but they start looking at buying a different house and they do the mortgage calculation and they're like, wait a minute, 7% is a lot different than the 3-4% that I locked in. They start to realize that everyone's kind of trapped in their home because of the interest rate change. So until we see some interest rates come down and the housing market pick up, I think it's going to be tough sledding for Home Depot. The only kind of, the other, I guess, political thing that we could have a uptick coming from is that realtor, that whole thing that happened where the commission rate can't be locked in at 6% for the sellers. Maybe we'll get some more volume turnover there, but I still think that the mortgage rates being so high scares people off from selling. Everybody's kind of stuck where they're at. And instead of, remodeling so you can get more out of your house, maybe you just go on a nice vacation. That's the data that we're seeing right now. So Home Depot is that bigger project, more professional angle. And so they're going to suffer until I think we get some housing pickup.
Yeah, I think it's almost, I think Home Depot made this run based on the fact that everybody thought rates were going to come down. Remember, just a couple months ago, they thought 6 or 7 quarter basis points cut. That would be a benefit for, houses moving, people fixing things up if interest rates come down. I think maybe that kind of fits into that narrative that the market kind of got ahead of itself. Maybe the stock did also. But great data as always, Landon. Appreciate it.
Thanks, guys. Appreciate it.
All right. That's Landon Swan, co-founder at Likefolio, breaking down the data for us. I wasn't surprised when I first saw